Hey friends, imagine you have been trying to impress the cool kids for years. You bought new clothes, changed your haircut, picked up new hobbies, and after all that effort, they still look at you and say, "Sorry, bro, you still can't sit with us." That is exactly what just happened to the Chinese RMB because the London Metal Exchange, LME, the world's most important marketplace for global metals, just quietly kicked the Chinese RMB out of the room. No more RMB denominated trading for key metal options. And for a country that's been shouting de-dollarization, RMB rising for a decade, this is humiliating. Let's break it down. The big headline is the London Metal Exchange will suspend all metal options trading in currencies other than the US dollar, including the Chinese RMB. Translation: thanks for coming, but we're going back to US dollar only. The LME politely said the reason for this decision is low demand and high operational cost. But behind this polite British tone, it is basically saying, sorry, Beijing, nobody wants to use your currency here. And you have to understand, the LME is not some random exchange in rural Sichuan province. This is the central nervous system of global metals pricing. Aluminum, nickel, copper, the exact stuff China needs to build its industrial machine. So when the LME walks away from the RMB, it's not just a financial issue. It is basically a geopolitical slap in the face. Now, why is this a massive blow to RMB internationalization? Well, for the last decade, China has been screaming from every rooftop, use the RMB, down with the US dollar, build offshore Yuan centers, launch oil futures in Shanghai. They threw everything at the wall. Currency swap lines with dozens of countries to bypass the dollar, offshore clearing banks from Singapore to London, and forcing the SOEs to settle trade in Yuan, and the whole petro-Yuan propaganda, Yuan-denominated commodity contracts. China threw the kitchen sink at RMB internationalization. But here's the painful truth. Real currency power is not about your propaganda. It's about what global markets actually trust. And when the LME, a global commodity titan, says, we're done with RMB products, it's basically a global vote of no confidence. It is the market saying, nice try, but we are sticking with the US dollar. Now, let's address the critiques typing in all caps. Ken, this is not fair. The LME suspended every non-US dollar currency, not just the Chinese yuan. Sure, but that argument is like saying, hey, the whole building flooded. It's not just your Lamborghini that got ruined. Yeah, technically true, but Only one person lost a Lamborghini. Well, let me break it down. First off, the euro and pound are not trying to overthrow the USD. The Chinese yuan is. The euro is not running a global ideological campaign called de-dollarization. The Japanese yen is not forcing African countries to borrow in yen. The British pound is not building a parallel financial architecture to bypass SWIFT. Only China turned its currency into a political movement. So when the LME shuts down all non-USD contracts, the RMB is the only currency whose geopolitical narrative collapses. And, a decade ago, the LME actually treated the Chinese yuan like a rising superstar. Let's not pretend that this was equal treatment. In the mid 2010s, the LME launched RMB-denominated metals contracts and partnered with Chinese banks to build special clearing channels and even send their executives to, woo Chinese traders and treated the RMB as the future. This was not a casual experiment. This was back then the LME betting on China's promise that China will dominate global commodities. The Chinese yuan will become the next major pricing currency. Now, fast forward to today, the LME, the same exchange that once, rolled out the red carpet, is now ripping that carpet away. This is not a routine decision. This is disappointment about the trajectory of the Chinese yuan. Nobody reads, Japanese yen options suspended and thinks, oh no, Japan's global currency dream is dead. Because Japan never had that dream. But China did. And the LME just told China, your currency is not worth the complexity. And most importantly, the market rejected the Chinese yuan long before the LME did. The LME didn't target the Chinese yuan, but the traders did, the producers did, hedge funds did, commodity houses did, foreign central banks did, even Chinese companies did. Everyone had the same reaction. The RMB is too risky, too political, and too tightly controlled. This low demand is basically British euphemism for nobody wants this Chinese yuan denominated product. That's the real story. A decade ago, China thought it was winning. Back in the mid 2010s, China was the world's metals superpower. Its demand, driven by real estate growth, pushed up global metals prices. Its state-owned giants dominated supply chains. So RMB looked like the next big thing. Even Chinese state media publicly declared that RMB internationalization is unstoppable. And fast forward to 2025, LME walks in and says, well, nobody uses this, so we're cutting it. It's like your ex, who once called you their whole world. and now doesn't even return your tax. Yeah, the LME gave the official reasons: low demand, high operational cost. But the real reasons cut much deeper. First off, capital controls trap money inside China, and nobody wants to settle global commodities in a currency you can't even freely move. And second, China can freeze assets with one political tantrum. Ask Alibaba, ask Didi, ask foreign venture funds. And RMB is not even freely convertible. A global pricing currency must be able to flow freely. On top of that, the political risk is sky high. The currency is controlled by the Chinese Politburo, not the free market. And companies fear this sudden Yuan devaluation. China has a long history of sudden stealth devaluations. And its legal system doesn't protect foreign investors. Rule by law, not rule of law. These are deal breakers for global commodities markets. Nobody wants trillion-dollar supply chains priced in a currency that lives under totalitarian, supervision. So let's check the reality, the scoreboard. Saudi Arabia still prices oil in US dollars. BRICS countries quietly prefers dollars. Even Belt and Road nations dumped Chinese yuan debt. Africa prefers US dollars, not the Chinese yuan. Even Chinese exporters convert yuan to dollars instantly. Chinese elites store wealth in US dollars and US real estate. And now the LME adds another brick in the wall. RMB, no thanks. Another door slammed shut. And meanwhile, the US dollar quietly tightens its grip. Semiconductors, SWIFT, global shipping insurance, capital markets, global commodities, reserve currency flows. Dollar dominance is not fading, it is consolidating. And this latest move from LME just reinforces it. Now, China will pretend it didn't happen. The state media will say Chinese yuan globalization remains on track. Relax. Yeah, sure. And I'm dating Taylor Swift. This is not a minor technical suspension. This is the market telling China very clearly that we don't trust your currency. And for Beijing's dream of a global RMB, this is a brutal reality check.